I should be maybe not double that amount of money for the second half of the month, but I can easily go, no problem, being 25% more than what we're at. So a real quick exercise on how to look at how much income you're generating from the premiums. I'm going to show you that exercise right now. This is an exercise in looking at how much money you've got on the table for premiums. And this is for the month of July 2021, and we are currently at July 15th, right here in the mid part of the month. So looking at the IRA, first we're going to open everything up. We're going to run the symbols from A to Z. So we'll start with Apple. But, you know, we've got $459,000 invested into our store here. How much money are we making in a 2-week period? We're looking at, you know, July 1st. We actually put the puts in, I think it was put all the calls and puts in on July 2nd for 2 weeks, all the way through July 16th. We got a bunch of them falling off. But how much money is actually available? So to be made. Now, we've already put this money into our checking account, but we may have to pay some back if we want to get out of our obligations. All contracts are, you know, I agree to sell this by this date at this price, and if you buy that agreement from me, then you can buy it at 147 all the way up to and including August 6th. So how much could I have made on that? Well, I could have made $756. Now this is my inventory, so I'm not going to count that, but I'm going to count the $756. So let's go ahead and pull the calendar up so you can see as I do this. $756 plus, we're done with Apple. Baba. I did make $368. I may have to pay back some by tomorrow. See, I may have to pay back $6, but the question is not how much I'm going to pay back, whether I pay 25 out of the 650, because I'm not paying anything back if it doesn't hit 240. I'm not going to pay anything back if it doesn't hit 250. It's currently at 211. So I'll move the calculator over here so you can see what we're earning so far. So we got the 756 plus the 368 plus the 650 plus the 813. Now we got to put out there at 210, so that's a plus 4790. So you see so far we're up to 7,300 in earnings, but we had to do insurance on this put, so that's a minus. We will minus the 1835, and we will minus the 1720. The next one is a call for July 30th. This is on the table, so we're going to add. We're currently at 3822. We're going to add the 270. Going down, add the 748. And that's product that we own for August 20th. Here's a put, 70. CCL, we could have made 2650. Chewy, we could have made 163. Kronos, we could have made, or we are going to make 255. We're not going to hit 10. See the 10 over here? We're not going to hit 10 by tomorrow. It's a 767. We're not going to hit 10. The probability that we don't hit 10 is 99.5%. According to Tastyworks, that's what they run their algorithms on. You know, the probability of us hitting that is 99. Probability of us hitting Chewy, it's currently at 78, and the call for tomorrow is at 95. It's at 99%. That's about as close as 100 as they'll actually give you, because nothing's ever guaranteed. You never know what will happen in the market tomorrow morning. But so far, we've got the 163 in there. All right. Then add the 255. Add the 500. Add the 1,055. Oops. And then we've got a put over here. We got to take the insurance off. So we need to subtract the 155 and then add the 1545, then subtract the insurance, 390. So far we're in the G's and we're up to 11,299 in premiums for this month. And IMR, we'll add the 390. The reason why we're not adding this 12,000 is because that's our inventory. On our inventory, we made 390 on, about $13,000. So we actually only have about 12,920 invested because we brought our cost basis down by $390. So we're up to what, 11,689. JD.com. We've got a put out there, which we're gonna make all full money on. So full money would be add the 2530 minus the insurance, and now we're up 12,600. Marvel, we're going to add 196. You don't always get rich by hitting $900 deals, but I can live with $196 on an investment of 6152, especially when the stock happens to be going the right way. So I'm going to move over here to the right a little bit and show you the stock's up $2,419. I bought it at 61.52 and it's currently worth 85.70. I like these deals. The stock's going up and I'm making premiums every 2 weeks. So I'm making $200 on a $6,000 investment that's already worth $8,000, but I'm making another $200. So I can make it, if I keep doing this every 2 weeks for 26 weeks, we're looking at about $3,000 more in premiums, and I'm up $2,000 in stock. So plus a put of 1272, the one we looked at earlier, minus the insurance of 260 minus 424. Reason why there's two of them there is because I broke it up into 4 at that insurance and 8 at that insurance, and to cover these 12 puts up there. So we're looking pretty good there. We're going to end up making $600 on this as long as it stays above $42. Where are we at? We're at 891. So plus 891 plus 1660 minus the insurance. We're up to $16,000. Now we're getting into the inventory. We own 12, 15, 10, $22,000 worth of inventory. Pepsi. Pepsi's getting close, August 6th. We're going to make $146. You might say, well, how you doing on Pepsi? I don't know. Let's take a look. Pepsi, we bought it at $37.60. It's worth $49.80 right now. So we're up $1,200 on Pepsi. But it's saying, oh, you're really behind $217. That's the time value of money. Okay, the time value of money means that it'll evaporate by the 6th. And if it stays right here, then that'll go down to 0. But anyway, back to kind of a long one here, but it's a good example. Now here's the Iron Condor. We bought this trying to keep the price between 120 and 110. So we have a call out there at 1680, which is our insurance on our call, and we have 2740 to make. So we can add another 2740, and we subtract the 1680. Now, yes, it is our inventory, but it's our inventory covering this particular put. So we need to add the 3620 for the put and subtract the insurance, just like we've been doing all up and down the line here. So now we're up to 18,744. Winnebago, a $390 call. And our last stock is XPing. Let's take a look and see what we're making on these. So we're making 358. We got a put here, so we need to take the 2. 1250 minus the 900. This, and then it looks like the rest of them are just stocks we own. So now we're going to pay some back. Yeah, we're going to pay some back. We probably won't, hit every put that's coming up. But so far, the only one that really looks bad is the Carnival. But it could happen. They could drop quite a bit. The Carnival is not looking good for. This is one of those, that you just take a bloodbath on. But you always do the insurance so you don't get killed too bad. I don't want to pay $6. It was a 28. I don't want to pay a $6. If I'd owned the stock, I would have lost $6 a share, and that's 30. That would have been 3,000 shares of $6. That would have been $18,000 loss if I'd owned the stock. But I'm doing this option so that I can limit my risk. I would have made $2,600 and put insurance of $1,300 on it, so I would have made $1,500 on this transaction. What's going to happen instead is, even though it's showing a large amount, as I get closer to July 30th, I'm not going to lose $8,000. It's going to actually go down because it's showing $8,000 here, but it's also showing $3,800 here. It's showing that I could lose $3,000, but that's because it's not July 30th. It says I could lose $3,000, but I know that the most I can lose is the difference between these two right here. The 600 minus the 2,600, the most I can lose is $2,000 bucks. I think we calculate $1,800. So I'll just wait. I'll wait till it gets to July 30th. Hopefully the price gets back up over 25. But if it doesn't, I lose $2,000. And you say, well, how much did you have to invest to be able to do that? Well, it's $459,000. So what is my return on investment? 1942 divided by 459. So divide that by 459, 042, which is the amount of inventory I have invested, and you come up with 4%. Now that's 4% over 2 weeks. That's 4.35 times 26. That's over 100% return on investment. So this is how you do the calls and puts, and that was just a quick exercise on how much inventory we have sitting out there and what kind of money we're making on it over the last 2 weeks, which was almost $20,000. This is Trading with Rich, signing off on July 15th. We'll do another one at the end of the month in August and see how much, before August 1st, we'll see how much we had in there for the whole month. These July 16th products are going to be gone. They expire. Everything you see with July 16th, they expire. I collect 100% of all the money because I did not hit any of these calls. When you look through there and you look and see, well, how many July 16th day, and I hope you learned something. If I went way too fast, just keep watching for future updates on Trading with Rich. Hit subscribe, hit the notification bell. You'll see when I do a new update on how these stocks went further. I'll stay with this account because it's got a lot of different examples in it. It's just one of my portfolios. We're investing